Hey traders, today we're talking about a powerful option strategy called the Iron Condor. And we've got a couple of great trades that are set up perfectly for this strategy right now. We're going to be able to make several $100s in less than 30 days. And if the stock prices do move against us for some reason, no problem. We'll just roll out to the next month and collect more premium. So whether you're a new option trader or a seasoned trader, we've got something for you definitely in this video. So, hey, be sure and hit the like and subscribe buttons down below. Also, download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. The Iron Condor option strategy is a strategy that's designed to profit from a decrease in volatility. So we like to put this on in high volatility and then look for a volatility crush or lower volatility. And then we make money as long as the stock price stays between the short strikes before the expiration date. So it consists of selling an out-of-the-money call and buying a further out-of-the-money call, and then selling an out-of-the-money put and buying a further out-of-the-money put. And this is a defined risk trade. So we know our max profit and our max loss. And what we're doing is we're selling a call credit spread on the upside and then a put credit spread on the downside. So the risk reward of an Iron Condor is pretty much as follows. It's limited profit potential and a capped net premium received. So when you place the trade, it's the amount that you collect up front. That's your max profit. It's also a defined max loss. It's limited to the width of the widest spread minus the credit received. And the profit is achieved when the underlying asset closes between the short strikes. It's most effective when the trader expects the underlying asset to remain within that price range, and market volatility is expected to be lower than when you put it on. And the trader seeks to benefit from that time decay of the option contracts. So over that 30 to 45 day range is what we look for. And the time decay, or the passage of time with our stock price staying between that range, benefits us, and we collect premium pretty much every day. So just like any option strategies, risk management and trade management is super important with Iron Condors. Now, position sizing is important as well. We want limited exposure, so never invest or put into one underlying or stock more than 3 to 5% of your portfolio on one certain trade. And stop loss orders, we don't have to worry about them because it's defined risk. So it's built into the Iron Condor. Since we're selling a call credit spread and a put credit spread, we've got protective puts and calls on each side. Now, adjustment. If the underlying stock moves outside of the expected range, we can roll the untested side closer to the stock price to collect more premium. We can also, if tested, widen the spread in periods of higher volatility when we expect it to decrease within the time frame before expiration. And we want to consider closing the spreads, the Iron Condors, if we reach anywhere from 50 to 80 to 90% of max profit. Sometimes I'll even let it go all the way. And finally, we've got to be prepared to close our positions if the market conditions shift and it moves way out of our range. In that case, sometimes I'll just close it out and recenter my strikes and recenter the whole Iron Condor. All right, guys, here's the two Iron Condor trades that we're going to talk about today. The first one is Marvell, ticker symbol MRVL, and I'm on the Tasty Trade option trading platform. Great platform. I've got a link down below. There's some benefits if you join through my link. We're going to click in MRVL, the ticker in the upper left here, and then we're going to go to the trade page, and we're going to be on table mode, and then we're going to look to go out 29 days. I like to go 30 to 45 days, but actually 29 days is pretty close, and it sets up pretty well. And these are the regular option chains, not the weekly. So we click on the March 21st to open up the chain, and Right now, the stock's trading at 107, and the IV rank is high. It's at 73, and that's because we've got earnings coming up. Let's see. It's on March 5th, so this is after earnings, so there is high volatility. But take a look at this. Look at the chart for Marvell. My target is 130. It's a great AI chip stock, and it's had a pullback. And there's support at 100. And then again, my target's 130, and it's right in the middle of that, and right in the middle on the RSI. So it's a good setup. The fundamentals of this company are outstanding. You can see the revenue, net income on the income statement, and then the balance sheet with assets and liabilities. They've got great profits as well, almost 40%. So great stock to trade, one that I trade all the time. So again, we're on the March 21st. So we've got puts on the right, calls on the left. We're going to sell a put, and we're going to look to go pretty far out. Let's go to the 95 put, and that's a 22 delta. So that gives us a 78% probability of profit. So high probability of profit. If you go to the curve mode, you can see, if you're on curve and analysis, you can see we're profitable all the way down 95 minus the 266 down here. So as long as we stay in that range. But again, we're going to put on the spread. So we're going to sell the 95 by clicking on the bid, the sell, and then we're going to buy the 85 as protection. So if it were to drop below 85, we would be stopped out. So our max loss is the difference, 821. So it's the $10 minus the 179 is our max loss. Our max profit is the amount that we collect up front, $1.80. And one option contract controls 100 shares of stock. So that's basically times 100. So it's $180. But we're not only putting on the put side, we're going to also play the call side. And here we're going to go to let's try the 120, 130. Actually, we can go even further. I like to collect a third the width of the strikes. So we can't lose on both sides. We can only lose on one side if it went outside the range. But again, I think it's going to stay inside this range. And we're going $10 wide here. And together we're collecting $3.23. So $323 in less than 30 days, as long as it stays within these short strikes. We can go on the curve mode. This is what I love about this platform. And then you can see the huge profit range that we've got on this, from basically 92 up to 127. And again, if you look at that chart, that puts us down here, way down here, up to, the resistance. There's resistance up here at 127. So we're within that range. I'm confident in the next 30 days it's going to stay within that range, even with earnings. So with that, we're in the curve mode. We hit review and send and place the trade. Okay, guys, now let's look at CEG, Constellation Energy Corporation. Now, this stock is interesting. It's a huge part of the AI boom. You can see that it's trending up, and if we look at the financials, strong, 51% ratio. About CEG, you can see that they're an energy producer. They're big in nuclear. These guys have been moving up because of the power necessary to run the data centers for AI. So they're going to continue to do well going forward. So let's, again, we're on the trade page and table mode on the Tasty Trade platform. And you can do this on any option trading platform. But we're going to go again to March. And we've got earnings prior. So there is high volatility, 54. We've got earnings on 225, and it's 220 today when I'm making this video. But we're going to click on the March 21st, open that up. And then again, we're going to go to about the 20 delta, give us about 80% on the downside. We're going to click on the sell on the 280 and the buy on the 270. We'll collect $1.90 for that. And then on the upside, let's see what 350, 360 does for us. Perfect. It puts us right at 320, a third the width of the strikes. And I'm leaning a little bit long on this, but you can see if we go to the curve mode, anywhere between 275 up to 355. And again, looking at that chart, that puts us way down here at 275 and all the way up to 355, where it's hasn't been before. And my target is actually, it's right at my target right now. So back to the trade page. I think this is a great trade, a way to make $350 in less than 30 days. We hit review and send and place the trade. All right, guys, if you got something out of this video, be sure and hit like and subscribe down below. Download the free options workshop. Leave a comment. Let me know. Are you trading these particular stocks and using Iron Condors or something else? Or what other stock are you trading right now? Let me know. If you've got a question, ask that as well. I answer every one. Thanks for watching. I'll see you in the next video.